Hey gang, Nate Bear here, lead technical tactician for Monument Traders Alliance and Trade of the Day. And in today's video update, I've got three things I want to cover. First, I want to go over the SPX. I want to update you on the levels I'm watching, what I'm looking for this week as we are in ChopX. The second thing I want to do is go over my current chart layout. So I've been getting a lot of questions as to what indicators I'm using, how to set up the chart, what is this, what is that. So I want to go over that. I'll show you a fresh chart and then I'll add each indicator and we'll go over them. And then the third thing I've got is a fresh setup for you, something that I am watching for entry this week, okay? So let's dive right in. Let me pull up the charts. And the first thing I want to go over, as usual, is the SPX. And this trend line, if you are new or not been following along for very long, is the trend line that we were sort of held under all of 2022. Wow. The interesting thing to note here is that when we have this break of the trend line, we've now sort of continued higher. And what we've been talking about is a move higher, which we got off the trend line break, and then looking for a pullback and sort of some chop. That's all coming through just as we have been discussing. The one thing I want to note is if I zoom in on this little pattern here, it's actually starting to look pretty interesting. I don't have a squeeze yet. You'll notice I don't have red dots, but this is a nice little pattern that's sort of setting up, right? If we were past OPEX, if we were past monthly options expiration, which is this week, monthly options expiration for February is this Friday. If say it were next week, I would actually definitely be looking to sort of get long, today or tomorrow for a move higher out of this pattern. Since it is OPEX, I am looking for this to actually revert back to maybe 4,100. Now anything can happen. We could be at 4,500 by the end of the week. Who knows, right? Anything can happen. But given that it is options expiration, I personally am looking for the market to trade lower into 4,100. Typically what happens is if you start OPEX with a move higher, you get a drift lower to end the week. And eventually by Friday, you really haven't gone anywhere. The same thing is true on the opposite side. If you get a move at the beginning of the week in OPEX that goes lower, normally then you get a move higher. And, eventually by Friday, you're about where you started. That's what usually happens during OPEX. So given that we have started the week higher, right? Yesterday was a pretty nice day for the SPX. I am expecting we may get a little move, even a little more strength, perhaps 4175, maybe 4200. I kind of doubt we're going to break out above this level this week. Again, you never know, but I expect that we're going to sort of drift back down and end the week around 4100, between 4100 and 4150, somewhere in through here. So we'll see, but that's my take on the SPX. All right, so the next thing I want to do is look at a blank chart. I'm going to pull up the SPX here, and I've just got this chart blanked out. So there's nothing here. There's no indicators. The only indicator that I've got on the chart currently is just the default indicator, which is down here, these red and green lines, which is just the volume right down here. That just indicates the volume. So that is usually standard on most charts. Some platforms will have the volume, down below as its own separate indicator. I prefer to have this overlaid on the chart because it saves room when I'm, it gives me more screen space. All right. So the first thing I do is I keep it very simple. But if you just go here to indicators, I use 3 exponential moving averages typically. And once we get into, at some point in the not too distant future, I will have a more expanded chart. But for the purposes of these videos and teaching from this sort of a high level, I keep the charts very, very, very simple. So I go over and I just start typing exponential moving average. And you'll see it popped up. And by the way, I'm using TradingView. It's a free platform. They have a paid version, which I personally use. But it is a free platform if you guys want to check it out, tradingview.com. So if you just start typing exponential, the first thing that pops up, moving average exponential. One thing that sort of threw me off in the past is you only have to click this once to add it to your chart. You don't have to click it. You don't have to double click. I was double clicking and I was having tons of these averages. I didn't know where they're coming from, but you just have to click it once. So I'm actually going to click it 3 times because I want to add 3 moving averages. 1, 2, 3. Okay, and as you can see over here, they're popping up on my chart. So if I now go over here and click on the little gear icon, I can edit the inputs for the moving averages. I like to use an 8 EMA, and I go over here to style, and I usually, or visibility, style, and I like to make the, excuse me, I like to change the color, usually, to I don't know, whatever you can change these sort of. I'll make it yellow for the purposes of today's demonstration. And then we'll click on the next one. And I like to make the second line, the 21. So I like to have sort of a fast, a medium, and a slow. I use the 21 EMA, and I'll change that to like a light blue. And then the third EMA, again, I'll just come over here and click on the icon, and I will change this to, say, yellow or orange. How about that? I'll make it red so we can see it. And then I think I accidentally added a line on the 8 EMA. There we go. Okay. So now I've got my 3 moving average. Oh, I forgot to change the third. So the third line should actually be a 55. So I use the 8, the 21, and the 55. And now you can see I've got these nice lines where I've got sort of a fast moving average, a medium moving average, and a slower moving average. And what you'll see me say a lot of times is, hey, I'd love, let's say we have, let's use this chart as an example. The aggressive entry, if you're buying for a long, for a pullback, would be the 8 EMA. That's the aggressive entry. The more conservative entry is the 21 EMA. This is sort of a medium middle ground. The very, very conservative entry down here is the 55. So for example, looking at the chart right in through here, if you were to buy the 8 EMA or the 21 EMA or the 55 EMA, right, you can see that they're sort of close together. Here, this would be a very aggressive entry, right, because the EMA is so elevated. The 21 is below, so maybe if you picked that up on Friday off the 21, that was a great entry. And then the 55 here is really lagging because we've had such a strong move in the SPX recently. But those are the 3 exponential moving averages that I use. The key indicator here is the squeeze, which is the indicator at the bottom of my charts. And if you just start typing squeeze, I've got the Squeeze Pro, which is a paid indicator, but and I'll add that just so we can see it. But there's also, like right here, the squeeze momentum indicator by Lazy Bear. You can see it's got 83,000 downloads or whatever this is. If you click that, they're very similar. It's you can see it's very similar, and you can actually go in here and play with these color settings, right, to make it look just like my charts, if that's what you want to do. But that is basically it. So very simple, right? I've got volume, I've got the 3 exponential moving averages, and I've got the squeeze on the bottom, which again is my timing indicator. It helps me position for entry with options. I'm looking for red dots typically on the indicator. All right, so the fresh setup, I'm going to go back to my normal chart over here. My fresh setup for today, considering it is Valentine's Day, I thought it would be fun if we could trade love, right? LUV. So if we look at this chart, what we'll see is that, well, there's really not much to do. And I'm joking, right? But this is a good example of what I used to do. And I would say, hey, you know what? I want to trade Netflix because it's Netflix. I want to trade love because it's Valentine's Day, and I want to be funny. But looking at this chart, right? Are we trending here? Right? Not really. This thing has gone essentially nowhere in a year. It's not trending. It's chopping. So for me, the first component of my system, the T, the trend, is out. I don't have a setup. Do I have a pattern here? I mean, is there a bull flag? No. I mean, is there a bear flag here? No. Really? There's no pattern. I do have a squeeze, but I don't have a trend or a pattern. So I'm using this as an example. Like when you look at a chart and it's just not there, you just move on. There are hundreds of charts with setups all over the place on different time frames in different sectors. Just because you have a chart that you want to trade doesn't mean that that chart is ready to be traded, okay? So anyway, a little Valentine's Day joke there. The actual chart that I want to trade is CSIQ. And notice the difference immediately, right? Look at the difference immediately. It just jumps out, right? We've got this move, this nice move higher. We've got this beautiful pattern setting up, and we've got a squeeze. So it's like, it's right there. 1, 2, 3, trend, pattern, and squeeze. I've got everything I need. It's so simple. The nice thing I like about this chart, a couple of nice things I like about this chart. One, if we zoom out, we've got this sort of level in through here where it failed previously, it's pulled back, and now guess what? It's building up energy just below this level again with a nice bull flag, right? Really nice bull flag and a great squeeze. What I'm looking for is the momentum down here to shift. So you see, if I zoom in, how the momentum shifts like here. It goes from red to yellow. That's a momentum shift, and you'll note that price sort of responds. Well, what's been happening is you have this big move higher. momentum shifted here. It's going down, 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 down. When that momentum shifts, that is the day that I want to get long. So I'm watching this like a hawk for a momentum shift. Structurally, as long as CSIQ holds this $39 level, this is going to be in great shape. If we start coming down here and start closing at 37, then all of a sudden I'm done. I'm not going to be interested in the chart. But I would love to pick it up between 40 and 39, somewhere in this range. It's getting a little dirty, but somewhere in this range between 40, I would say even like 41 and 39. So anywhere in through here is a great entry for CSIQ. Look for the momentum to shift on the squeeze. And then I would look to run this higher into say 45. All right. If we look at earnings, I don't think they have earnings until the middle of March. Yeah, here we go. So earnings are on Wednesday, March 22nd. So if I pull up my options chain for CSIQ, I can go out into either that earnings series, which is March 24th, and pick up the $40 calls, which is what I would personally do. Or you could go out into the week previous, the monthly options, the monthly series, March 17th. And same thing, I would still pick up the 40s. For me, given that the $40 calls for monthly options expiration in March are $320, and the earnings series for the same calls is only $350, we're talking 10% difference, 30 cents, not even 10%. I'm going to pick up these. I'm going to go with the March 24th. Whoa, that's way too big. The March 24th $40 calls in CSIQ when CSIQ is between 41 and 39, like we talked about. Okay. So anyway, that's what I've got. I hope it helps. I hope you guys are all having a great day. Just a reminder, if you are enjoying this content and want to see more, make sure to like and subscribe. And if you have any comments, questions, issues, concerns, if you just want to say hi, whatever, leave me a comment in the section below and I will get back to you as soon as possible. All right. Thanks for watching and have a great day. Later.